Polygon had this great technical upgrade to facilitate payments to make them smoother. And we would expect that that would help the price. Unfortunately, that's not the case. This is the POL token over time, a classical pump and subsequent dump. So headlines like this, "It's not our first trillion," don't feel really well. This, by the way, is referring to 2.7 trillion in transfer volume. Now, before the POL token, there was the Matic token. Matic was the predecessor to POL, and it then got migrated to the POL token. It also experienced a pump and subsequent dump. The system is quite complex. It's not just a single blockchain, it's several blockchains that get connected. Maybe in all of this complexity, there is still an opportunity that most people are overlooking. Let's dive deep into the data and see what's really going on. Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and it is mainly through active trading of altcoins. My track record is on the website down below. In the last 2 years, I started to publish my trades in real time. So that's 181 trades. We are now at an all-time high, and every closed trade is published here in real time on that website. Now, the current open trades, they are available to the premium members. More on that later in the video. Now, there are several problems with charts like this, right? POL in US dollars. The first problem is that this is a linear scale. We actually want to switch to a logarithmic scale because now we see the percent changes over time. This here is the same kind of percentage change compared to this, for example. But it doesn't look the same when we are on a linear scale, right? Then this horizontal delta is only 20% over here, but over here it's much more. Really, we are interested in percent changes, not in dollar changes. That's why we should change to a logarithmic scale. So that's problem number one. Problem number two is that US dollar prices are heavily influenced by the general ups and downs of crypto. Right? When Bitcoin goes up, the mini altcoins go up as well. When Bitcoin crashes, the altcoins follow. What we actually want to look at is how is an altcoin doing relative to other altcoins or relative to Bitcoin. So what's the outperformance? What's the underperformance? What are the potential opportunity costs? And then we are moving from a chart like this to a chart like this. This is Polygon relative to other altcoins. We can see that the decline is slightly slowing down. Now, Polygon relative to Bitcoin looks even better. It seems like at the beginning of the year, we have hit a floor. Since then, POL tends to trade in a range versus Bitcoin. Now, still, this is somewhat optimistic because clearly there are still lower highs along the way. So maybe we'll forget about that support and this will just turn into a bearish trend. But we haven't broken down there just yet. And there is the potential that if we do see that breakout, that Polygon could outperform Bitcoin by around 80%. Now, we first have to understand, why did Matic and why did POL underperform in the first place? I think this is mainly because of tokenomics. It's a token dilution. New tokens hit the market and the demand cannot match that token supply. Have a look at the POL tokenomics. So we've got a minting mechanism. New tokens go to validators and to the treasury, and that grows the supply by roughly 2% per annum. Now, this is not huge, but still it's more than Bitcoin, right? Bitcoin has a supply expansion of 0.8% per annum, and that will even go down to 0.4% in 2 years. But there's not just the minting of tokens, there's also burning. And actually, in the first half of this year, we did see slightly more burning than minting. And maybe that's the reason why Polygon can finally stabilize versus Bitcoin, why it doesn't underperform. At least it hasn't so far this year. The usage of the ecosystem now has a direct impact on the supply. Very similar to what we have with Ethereum, for example. And so that then begs the question, how is the usage of the Matic ecosystem developing over time? Well, we've got over here, that's the TVL, the total value locked on the Polygon chain, measured in US dollars. We had a peak at the height of DeFi summer in 2021, close to $10 billion. Then DeFi on Polygon imploded and no recovery is in sight. Now, when we look at the TVL measured in POL, it does look better. Why does this chart start later? Because there used to be the Matic token and now there is the POL token. Measured in POL, the total value locked looks good. But again, POL tends to go down over time. For example, if there are just a few stablecoins on the network and the price of POL versus those stablecoins is going down, then measured in POL, the total value locked is going up. So this is not the cleanest of metrics. However, here's the number of stablecoins over time. And this is actually growing in the last 2 years. We went from a bit over 1 billion to now 3.6 billion. So that's much quicker growth than the 2% per annum that's related to the POL supply expansion. Still, here's the number of active addresses over time on the network. And it's not necessarily long-term growing. It's just moving along. So what happened with the price development in the past is likely going to continue. And since now the supply growth is pretty much equal to the supply burn, I think there's a good chance that Polygon will continue to trade in a range versus Bitcoin, which actually is quite positive, right? Polygon could outperform Bitcoin by roughly 70% from here. But of course, the problem is the resistance. Now, in the last 24 hours, we only had 3.5 million worth of trading volume on the spot market. On the perpetual futures market, we had a bit more than that, 8 million. Most traders in that market tend to bet on falling prices though, so the funding rate is negative most of the times. Thus, when the price is going down, there's not much liquidations, rather unrealized profit accumulating. The open interest, so the amount of bets on the Polygon price, is rather low, and there is a correlation between open interest and price. When there is more open interest or more short-term speculation, the price goes up. When the leverage exits the asset, the price tends to fall. And so currently, the 50 million worth of bets on Polygon is actually a positive sign. If that was to shoot up to 150 million again, then of course the price would follow as well. So this is not necessarily an asset to hold long term. It's rather an asset to actively trade. And so I ran again a simulation of buying and selling the asset. What kind of trading rule does actually work best for Polygon relative to Bitcoin? So I tried to find the best golden crosses and the best death crosses, the crosses of moving averages, and that's over here. So what short-term moving average and long-term moving average should we use in order to generate buy signals or sell signals? That's in this graph. So we've got a slow moving average over here, we've got a fast moving average over here, and the best combination is the 2-day plus 8-day simple moving average. It produced a performance of 176% per annum versus buying and holding that only gave us an annualized loss of 60%. That's then how that looks like over time, right? So we've got the Polygon price at the top, we've got the portfolio value measured in US dollars in the middle, and we've got the portfolio value measured in POL tokens at the bottom. So this is a very nice long-term consistent trading strategy. And this is where we are right now. The 2-day simple moving average is still below the 8-day simple moving average. In other words, we still want to wait until we see a clear turnaround. Polygon relative to Bitcoin has to outperform over the next days by roughly 3 to 4%. Then we might get a buying signal, and then we might have a chance of actually breaking out versus that resistance. Before that breakout between the 8-day and 2-day simple moving average, I think it's way too early to buy the asset, simply because this strategy worked too well, too consistently over time. I think it's a mistake to ignore it. And this is in general my approach with trading, right? That's why my track record looks the way it does. I make money because I look at the data, I look at the trading rules that historically worked well. And while this doesn't necessarily produce only winning trades, what matters is the very long term. And very long term, over the sample size of 187 trades, we made 5% with every single trade. Now, I cannot share the positions that are currently open. However, there is this website in the pinned comment down below. You can get a free premium trade, a trade that I currently hold and that most premium members hold as well. It's 100% free. You don't need to pay anything. You don't need to leave your credit card. You can get that either via Telegram by scanning this code, or you can click this button on the website, again in the pinned comment down below, or you can also just plug in your email and then get that trade to your email. Besides the trade, you will also get a tutorial video that explains then how to set this all up and how to manage risk, etc. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.